Are candlestick charts confusing, especially for beginners just starting out? Don't worry. Today I'll show you exactly how to read them, step by step, in the simplest way possible. This is the full beginner's guide to candlestick charts, perfect for crypto, stocks, or Forex trading, helping you understand price action like a pro. Let's start with the basics. What exactly are candlestick charts? They are a visual representation of price movement over a specific period, like 1 minute, 5 minutes, 1 hour, or a full day. Each candlestick tells a complete story about the open, high, low, and close prices within its given time frame, whether it's a short minute interval, an hour, or even an entire day of trading. The main rectangular part is called the body, and it shows the range between the opening and closing prices, highlighting whether buyers or sellers dominated that period. The thin lines extending above and below the body are called wicks or shadows, indicating the highest and lowest prices reached during that period, showing the full extent of price exploration. Traders prefer candlesticks over simple line charts because they provide much more information at a glance, like the battle between buyers and sellers, offering a richer picture of market sentiment and volatility. Now, let's look at the basic types of candlesticks. First, the bullish candle, typically colored green to represent positive momentum. A bullish candle forms when the closing price is higher than the opening price, indicating strong buying pressure and suggesting an upward trend in the market. Conversely, we have the bearish candle, usually colored red to signify downward pressure. This candle forms when the closing price is lower than the opening price, signaling selling pressure and a potential downward trend continuation. Understanding these two basic types, bullish green and bearish red, is fundamental to interpreting market movements and building your trading confidence. Now let's dive into some key candlestick patterns that beginners must know. These patterns offer valuable clues about future price action and market psychology. First, the doji. This pattern has a very small or non-existent body, with long upper and lower wicks, indicating indecision in the market where neither buyers nor sellers gain control. It suggests that buyers and sellers are in a stalemate, and a potential reversal or continuation of the trend is on the horizon, often leading to high volatility next. Next, the engulfing pattern, a strong reversal signal that every beginner should recognize. It consists of two candles where one overshadows the other. A bullish engulfing pattern occurs when a large green candle completely engulfs the previous small red candle, signaling a potential upward reversal as buyers overpower sellers. A bearish engulfing pattern is the opposite. A large red candle engulfs the previous small green candle, suggesting a downward reversal with sellers taking full control. Then we have the hammer and shooting star patterns, both powerful indicators of trend reversals at key moments. A hammer has a small body at the top of its range and a long lower wick, appearing after a downtrend and suggesting a potential bullish reversal as buyers reject lower prices. The shooting star is its inverse, a small body at the bottom of its range with a long upper wick, appearing after an uptrend and signaling a potential bearish reversal as sellers push back. These patterns give crucial clues about momentum shifts, helping you anticipate potential changes in market direction early on. Now, how do you actually use candlestick charts in your trading decisions? It's crucial to understand that they are not magic or standalone predictors. Candlesticks work best when combined with other analytical tools, such as support and resistance levels, trading volume to confirm strength, and various technical indicators like moving averages. Always encourage viewers to practice spotting these patterns on demo accounts before risking real money, building skills without financial pressure. Mastering candlestick charts takes time, consistent practice, and patience, but it's a valuable skill that can significantly improve any trader's performance. Now you know the basics of candlestick charts from this complete beginner's guide. If you found this helpful, hit like, subscribe for more, and share this guide with other traders. Stay tuned for more quick lessons to boost your trading skills and confidence. Happy trading and trade smart.